the trend replication paper presents a replication method that involves two different approaches. One is a top-down approach, which is like a return-based style analysis. Basically, we've got a portfolio of markets. We've got different equity markets, bond markets, commodities, and currencies. And we are looking back over, let's say, the past 40 days of returns to the underlying trend index. And we're figuring out what portfolio, both long and short, all of these different markets, we would hold in order to best track the returns of the underlying index over that same period, right? It's a little bit more complicated than that, but that's effectively what's happening in the top down. And we have two different top down models. One is a smaller model that just kind of uses the big muscle movements, we often say. So like the major regional equity indices, only treasuries in the bond complex, and three or four different representative commodities. So energy commodity, gold, copper, that sort of thing, right? So small universe. And then another one, which is, we call the sort of medium universe, is 27 different markets. And then, so that's the top down, sort of 50-50 between those two, the small universe and the medium universe. The other approach is bottom up. And that's where we take our knowledge of how trend following strategies are technically built and implemented by trend following managed futures funds. And we build up a strategy based on trying to figure out which of the underlying markets and what sort of techniques to trade the underlying markets are best representative of the long-term historical returns of the benchmark, right? So we've got the same sort of 27 markets. Let's just pick on crude oil for a second. So we're going to have a very short-term trend following strategy on crude oil, maybe an intermediate term trend following strategy. So maybe like 20 days, maybe 60 days, 90-day trend following strategy, 180-day, et cetera, up to longer timeframes. We've got all these different trend following strategies on all of these different markets. And then we're figuring out which combinations of strategies and markets best explain the long-term returns of the benchmark, right? So top down, bottom up.